Hi, Daniel. I'm going to make you a panelist because I'm going to be showing your website. So we should be able to hear your voice, and then I'm going to show my screen so we could see your website.
Do you hear me?
I can. How are you, Daniel?
I'm very well, Dale. How are you?
Very nice to meet you. I appreciate you taking time out of your day. It's a pleasure to meet you. I'm showing your website here so you could follow along with me. So why don't we go right into it? We had some pretty negative news out of Italy. The euro's been under pressure. Looking at your piece that you're writing here, 5 charts that show the eurozone slowdown, you were really talking about what's happening in Italy, and it's kind of a deceptive thing that they're trying to show that everything's okay. So why don't you delve into that?
Yeah.
And so can I assume that you think we're headed into recession in Europe?
I think that we're likely to see an important slowdown. If you think about consensus estimates, they've been coming down from an estimation of growth of around 2% for 2019 to something like 1.7, 1.8% in 2019. Now, I believe that this is extremely optimistic because it includes very optimistic estimates for Italy, but also it includes significantly optimistic estimations for France and for Spain. So I think that what is happening in the eurozone is very simple. Is we've had the entire eurozone has completely abandoned any reform, and what they have and the countries have done is to bet it all on monetary policy. And as the effects, the placebo effects of monetary policy have started to fade away, and you saw in the piece.
Yeah, I'm showing this chart right here, Daniel, one of yours, where you're showing the QE in Europe really started diminishing returns was in 2015. So we kept QE kept happening, and it wasn't having the dollar per dollar impact for quite some time. So Draghi's on his way out. Do you think anything major happens? Because most market participants are looking for them, and how can they begin to end quantitative easing with their economies already slowing?
Yeah, it is quite a challenge. I think that what the European Central Bank will continue to do is to maintain a very accommodative policy. However, I find it very, very hard to believe, as some market participants are saying, that the ECB is going to increase rates by May 2019. I think that it's very, very challenging, considering the issue of Italy, which is going to increase the deficit, but also Spain. The Spanish government is also announcing that. And there is none of those countries can absorb an increase in rates. So I think that the policy will be very similar to the Japanese one, to the Bank of Japan.
Okay, QE forever, QE forever.
Almost.
Okay.
Yeah, almost.
And so actually, what would exacerbate the problem would be, and there are still some out there, would be a continued advance in the euro. Do you have a view on the euro? We had that nice rally from 103 to 26, and then pulled back to 113 a month or so ago, and we're trying to recover. What are your views on euro from the 116 level?
I think that the euro is, every time that it touches 117, 117.30, it goes back down. If you look at a longer term trading range, it is on a long-term devaluation trend since it was at 114. So what you see basically is this sort of bumps that happen from time to time that quickly come back to the trading to the long-term range. And the long-term.
Are you looking for under Daniel? Are you looking for under parity with this continuation? Okay.
I think it'll be difficult. I think it'll be difficult to reach under parity unless you had a sort of breakup type of scenario. But I
Okay.
think that parity is more logical if you think what the euro and the dollar need to be trading at, considering the fundamentals of their economies. The positive side for the euro is the trade surplus. That trade surplus is diminishing as the economy, as the world economy is not taking so many exports anymore. And the rest of the fundamentals that support above parity are not there, either in the fiscal deficits country by country, either in the elements that have to do with competitiveness, with growth, with inflation itself. No, so
right. So if a lower euro would help them in that case, and what about the effect of tariffs on an already struggling economy? How will Europe fare? Will they just look towards Asia to replace buyers of their what they manufacture instead of the U.S.?
It is very difficult. The idea that China or the Eurozone can offset the tariffs in the United States by selling the same goods and services to other countries is simply impossible if you look at the type of consumer that exists in the United States, if you look at the added value of the products that are being exported. So they need the United States. No?
We're not being patriotic unless we're going to the store.
Exactly.
Right, buddy? Yeah. Okay.
So sorry, just to go into that, it is you have already seen that that exports are slowing down, non-Eurozone exports are slowing down, whilst imports are rising. So I think that is difficult to offset with new markets.
Okay, and higher prices for countries that have weaker economies like Italy and Greece and Spain? Are they tariffs going to cause basic things that we need every day like food and shelter and fuel? Is that going to create any price spikes on those types of goods, tariffs? Because we buy almost everything from China here, so we're expecting that here in the States.
Yeah, not in the Eurozone. In the Eurozone, you have two factors that limit inflation. One is demographics. No, it's an aging, very rapidly aging population. The other element is overcapacity. The Eurozone continues to have around 24% overcapacity, industrial overcapacity. That limits price inflation. What is true is that the Eurozone, as an importer as a big net importer of agricultural and energy commodities, is going to suffer, at least in the short term, from the price inflation in those commodities. And if the euro weakens, obviously inflation goes up.
Yeah, so it makes things even worse.
The way that I expect the euro to move is likely to impact negatively inflation, negatively as in going higher, inflation expectations for the Eurozone.
Interesting. You talked about potential breakup. Why don't we go across the pond to where a real breakup may be happening, and we don't know if it's going to be amicable, and maybe they'll kiss and make up, and at least be able to raise the kids together. But what do you think about the UK and this deadline of Brexit? And there was a potential compromise news today. You have a view on Brexit here, Daniel?
Yeah, I think that if we look at the pound relative to the euro, the pound relative to the euro is already reflecting a hard Brexit, in my opinion. And I don't think that we will get a hard Brexit. I think that we will likely see a compromise. What we're seeing right now is a little bit like the alleged trade war between China and the US. Is a negotiation process made under media headlines, no? but the negotiation will happen. So I think that we are likely to see a negotiated process that will be mutually acceptable. I wouldn't say mutually beneficial. I think that it's not going to be ideal for anybody, but I think that it'll be negotiated. And I think that if you see that the pound has been sort of bouncing at the levels at which every time that there is a perception of a negotiation, I think that that is what it's reflecting. It's reflecting that that there is already, you have already sort of embedded in the valuation of the pound that the situation would be the most aggressive, and I think it will be a lot more negotiated, a lot more diplomatic.
So do you have an overall bullish view of the dollar against almost everything, the whole world?
I have an overall view of the dollar index going back to plus 95 levels, and I think that
we're there.
And it needs to go. You know, it needs to confirm that. Remember that every time that it sort of fiddles around that level.
Yeah, there's a pivot. There's some nice pivots around 5.5 before we went to 97 and after. So you're saying over 95.5 would be a bullish event, and you'd look for the dollar to make new highs.
That I think, and that is consistent with my view of a global economy slowdown, but not collapse or recession or a big crisis. Simply the evidence of the imbalances built by emerging markets, by the Eurozone itself, and by China in the last 8 years. So that would sort of help the dollar drift back to sort of the previous high levels.
Okay. I have to do it. I don't know if you have a view on it. I have to ask you what your view is on the crypto phenomena, and if you think some of these currency crises where people, used to go to gold and silver and look for other havens against their fiat. What's your view? Is it all hype? The technology? I've heard rational arguments on both sides. What are you telling your subscribers, Daniel, about crypto?
I think that there are rational arguments on both sides. I always say we have to split cryptocurrencies between whether they are currencies as reserve of value and means of payment, or as financial investments. No, as financial investments, obviously they are, and they have to be, extremely volatile. These are startup currencies. What I believe is going to happen is that as if you look at the denationalization of money that Friedrich von Hayek mentioned many years ago, is that he already mentioned that most of these cryptocurrencies will disappear, and some of them will actually become real alternatives to fiat currency.
Interesting. Yeah, kind of like what happened in the dot-com bubble.
Exactly.
Most of those went away, but a few of them ended up being dominating in our society, our world, and everything we do.
Exactly, because if you think about it, what is missing for most cryptocurrencies to become real means of payment is precisely a reduction in volatility and a widespread level of utilization from manufacturers. I think that if you're looking at what is happening with emerging market currencies, it is very interesting to see how citizens in Argentina, in Turkey, in Brazil, in the countries that have seen the biggest collapse in their currencies, they have been equally looking as an alternative for gold and for cryptocurrencies. And I think that that is showing how they are starting to become, for the weaker currency countries, an acceptable alternative. But I think that, again, we need to think about them as startup currencies. The vast majority will disappear. A couple of them, maybe 3, will actually thrive.
Okay, interesting. You have any kind of time frame on how long that shakeout may take? And then I have a question about some of your prolific writing, Daniel.
Thank you. The first thing is, I think it'll be a process that will happen in the next 5 years. The
Okay.
next 5 years are going to be crucial because the massive monetary expansion that we have seen in the past 8 years will either will show its true face, its real consequence in the next 5 years. Whether it is debasement of major currencies, whether it is stagflation, whatever it is, that is going to be the test for these alternative currencies.
Interesting. Okay, so we have a lot to look forward to historic markets in the next, up until I know a lot of people are talking 2022, a lot of cycles coming into play over the next 4 years. I'd like to ask you, this is an interesting title to me because, I lived a life in the financial markets. And I'm sure that this book would at least teach people that life in the financial markets is not like the movie Trading Places or Wolf of Wall Street, right?
Absolutely, absolutely.
All right, so in this current environment, Daniel, of your writings, what do you think would be a good start for our viewers, listeners? What book would you recommend so that they're, kind of prepped for what we're living through now?
I think that Escape from the Central Bank Trap, which is now on its second edition, including comments about Argentina, Turkey, and the yuan dollar trade war. I think that this one is probably the one that touches upon most of the things that we discussed and that were discussed in the previous minutes when I was listening. No. So I think that this one can be quite interesting, especially for the audience here that is, that knows about markets and knows about trading. I think
actually, isn't that a mantra of the people that are, touting the great escape from central banks as being crypto?
Well, it is, but it's not. But I'm not going to tell what I say at the end of the book. But are not necessarily. We have to be careful about that. Are not 100% necessarily the solution or the end game. And I think that I explain it at the end.
All right. And besides your books, you have a subscription model here where people could follow you, follow your writings, and etc. So is your website address your name? www?
Yes, www.dlacalle.com, and you have a part in English and a part in Spanish, so no one can complain about the languages. So
wow, I wish I spoke Spanish like you spoke English, Daniel. What a great interview. I really appreciate you coming and sharing. I encourage people to sign up for your letter if you want a good fundamental view. I know we look at a lot of charts in here, but that's only half the picture. I recommend you go to Daniel as a great resource for what's happening in the Eurozone. And I'd like to call you my trading warrior brother now, Daniel, and perhaps we could do this again down the road. Thank you for your time.
You bet. Thanks for having me, and thanks a lot for the work you're doing, Dale. Great. Thank you. Great. It's been great. Thank you so much.
Thank you. Okay, everyone. So we'll see everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. Remember what I said. If you buy the market, because of NAFTA, you might get the shafta, but actually, let's take a quick look at what the metals are doing before I say goodbye. So they're starting to give up their gains. Gold is still holding Friday's low. Here we are, we're still at 88. So silver's struggling a little bit more, and we'll see what happens tomorrow. Good hunting the rest of the day. See you in private member chat. And remember to go out and smell the roses. Don't sit in front of your workstation all day. You could always get us right on any device you could carry with you. Adios, everyone. Remember, last couple of days to get on board with the sale is the last couple of days today. You're very welcome, Paul. Thank you, Daniel, for being with us today. And everyone, good hunting.